the street reaction to Reliance Industries' buyout of Future Group assets was a positive one. Despite of the fact that it was being reported for some time now, the actual announcement did garner a lot of positive feedback from the brokerage community. Even the street reaction was actually a positive one. And most of the brokerages believe that significant synergies actually could come because of this acquisition. They get greater than 50 million square feet worth of retail space. Their overall on-ground presence goes up by almost 80%. And now they have a very dominant market share as far as the organized retail business is concerned, which Reliance Retail is very serious about scaling up across the country. Not only that, the valuation of Reliance Retail now starts going towards the most valued organized retail company in India, which is D-Mart. So that valuation gap is also closing in. Most of the brokerages believe that now the acquired EBITDA of Future Group actually can double because of better utilization and synergies coming in with Reliance Retail. Even if you look at the acquired price of valuations, 10 times FY20 EV to EBITDA, it is being seen as a very value accretive deal going forward. So a great asset which Kishore Biyani had built over the years comes at very good price, and now the synergies will start coming in, which will be value accretive in the numbers as well. Not only that, this is just not acquisition of assets as far as retail is concerned. Warehousing assets also come under Reliance's fold. Logistics assets also come under Reliance's fold, which is very strategic in nature, and it is important if you are talking to scaling up your omni-channel retail strategy on a multi-decade format going forward, and Reliance Retail is aiming towards that. The back end of Reliance Retail via JioMart is technology ended. Front end of Reliance Retail is brick and mortar retail network and the kind of shops across the country in all format. So net-net's a strategic deal. There are no great upgrades as far as the price target of Reliance is concerned, but most of the strategists say that as earnings starts coming in and as synergies start flowing in, be it sourcing synergies, better efficiencies of economies of scale, then the price targets will actually start moving in. In fact, most part of the day, the stock also traded in the green, but then of course there was a big kind of a sell-off which happened in the market. Reliance also came down, but the brokerage street reaction and the brokerage reaction, all of that was actually towards the positive side. So it's a good deal which has finally happened. The payment structure is that some payment will go upfront, some will follow, and they are very well capitalized right now. In fact, it is very interesting that Reliance's announcement of getting a government nod for Brookfield deal also, where they are selling their tower assets, almost $3.5 billion, came in coinciding with this transaction. So they are adequately funded. One section of the market also believe that Reliance, which is now extra cash on books, not only have they turned debt free, but there is extra cash on books, will turn very aggressive, and this may not be the last of the acquisition which the company has done. They may go further in NetMeds of the recent one. There could be some other startup model acquisitions. They want to make their bouquet of retail business very sturdy and strong and capable to be like a Amazon of India, which can be run over the next few decades. So in that larger scheme of things, this acquisition actually fits in quite well, and that was seen in the street reaction as well.